One thing that has allowed the growth of private markets is this growth of secondary markets. So let's take Facebook as an example, right? Facebook started in 2004. By 2008, you'd have engineers with stock options that have vested for 4 years. But those stocks, right, those shares are not public. So people started thinking about how can we provide some liquidity? How can we broker into these assets? And they started creating these secondary markets. And these secondary markets are essentially where people buy and sell shares of private companies. So this is a slide from last year, third quarter of 2025. You can see that the way that US VC exits have happened is traditionally it's been IPOs and it's been M&A transactions. So those are both were about $100 billion. But secondary markets have grown to almost the same amount, right? So you got about $80 billion of direct secondaries and $14 billion in GP-led secondaries where funds need to take their own portfolio companies and sell them into the secondary market. And this has allowed to provide liquidity to founders, to employees, to investors, and remain private, right? So these are typically tender offers that companies do. And so if you think of a SpaceX, right, which is one of the largest private companies, they've regularly done tender offers to provide liquidity to their employees and to investors on an annual cadence. And so I think this is a big change and it allows companies to stay private.